We have some exclusive breaking news about Anthropic. The information Sri Mupidi is reporting that Anthropic's revenue projections are actually higher than OpenAI's for 2029. I want to bring on Sri to walk us through exactly what she's learned. Sri, welcome back to the show. It's great to have you here.
Excited to be here.
So, walk us through what we know about Anthropic's revenue projections.
Totally. So last month, Anthropic hiked its most optimistic projections, also known as the target case, from last summer. So Anthropic expects to quadruple its revenue this year to 18 billion and expects to hit 55 billion next year. That means that the revenue gap between OpenAI and Anthropic is shrinking. So much so that in 2029, Anthropic expects to generate roughly 148 billion in revenue versus over the summer, OpenAI had projected that it would generate 145 billion in revenue. Of course, OpenAI may have updated its projections since last summer, but that's striking given what we know. But Anthropic's growth is coming at a large cost. The company expects much higher compute costs associated with training and running its AI models, and it expects that its training costs through 2029 to be more than $100 billion. Just $12 billion this year, more than 50% more than its summer projections, which is really extraordinary to see just how much these companies are spending on compute.
So, this is kind of staggering here because you said this year it's quadrupling to 18 billion and it's going to grow again to 55 billion, which is again, what is that? Is that double, triple? I mean, it's already double, tripling again. And then, 145 is, we're talking about, growing multiples more year over year. Where is the growth coming from for Anthropic?
Totally. So a lot of the confidence over the revenue outlook is due to Anthropic's B2B sales of its AI models via an application programming interface, or also known as an API. For example, last year, Anthropic expected roughly 86% of its revenue coming from B2B sales. And in particular, its coding agent, Claude Code, has been a major success. It actually passed over $1 billion in annualized revenue in November. And coding is a large market for Anthropic, where it serves major customers like Microsoft, which is on pace to spend more than a 500 billion on an annualized basis.
You've got cowork too. I mean, conceivably, we don't know how that's factored in, but everyone's raving about it, so I'm sure that's factored in somewhere.
Totally.
Tell me about the stickiness of this revenue. I mean, you mentioned Anthropic is a B2B software engine. It's the engine that OpenAI hopes to be, although as we've reported, OpenAI's B2B sales in some ways are still larger than Anthropic's. But, I always wonder about stickiness of this revenue. Is there any risk of churn?
I think customer or companies like this always will have some risk of churn. But I think what's interesting is that typically of B2B customers, they usually have long sales cycles. They're spending hundreds of millions of dollars potentially. What we do know is that Anthropic has at least 9 customers spending more than 100 million. OpenAI, for reference, has roughly 7 customers spending at least 100 million. And of course, customers can churn, but this large contract value indicates that customers are signing up and committing, just as Microsoft, for example.
And then let's go back to profitability. So you talked about how the profitability will change. I think so. Last we spoke, the anticipation was that Anthropic would become profitable sooner than OpenAI. Is that still what we're expecting based on the numbers?
So Anthropic will now be cash flow positive. So I just want to make that point prior of a cash flow positive versus profitability.
Right.
And I think the delay, but Anthropic basically is still delaying how fast it turns cash flow positive. So in our summer projections, we knew that the company in its optimistic case will turn cash flow positive in 2027. These recent projections indicate that the company will now turn cash flow positive in 2028 in the target case. And that's really interesting because it's as a result of just the high training costs and other operating costs that we detail into the story that I think really kind of delay this company and is really, I think, an important point for the company as it thinks about going public, for public market investors, all these folks that are really keen on seeing Anthropic in the public market.
And so last question for you. Anthropic is angling towards going public at some point in the near future, as we've talked about. As a public company, you really, you have to stick to your projections, at least to some extent, right? I mean, you can't be switching them up quarter by quarter. I think the way that it feels like it feels like you're on the show so often talking about Well, it's changed. I mean, how likely is this to differ 3 months from now?
Totally. I think just because the AI market is so nascent still, you're going to see these companies constantly change as they learn more information, compute costs evolving, the number of enterprise companies or even consumers adopting AI. And so, just even in the last couple of months, we've seen from summer to now things changing. I feel like we're going to have a quarterly earnings report just from the information until the companies eventually do go public. And so, I think that we'll sort of maybe get an update in the spring, and that will be a time for us to dig into the numbers again.
Great. Well, Shri, I want to thank you for coming on. That is Shri Mapidi, our OpenAI and Anthropic reporter here at The Information.